And so ultimately, if I was to describe Bitcoin at a very, very like high level framing, Bitcoin solves the tangible nature of gold by creating a digital scarce asset that is trustless. There's no issuer, there's no central authority governing its trajectory, so you don't have to trust any singular entity, and it's permissionless. There's no need for middlemen. There's no need for someone telling you what you can and can't do. You can spend this money, you can't spend this money, you can do this, you can't do that. You have full control over your Bitcoin. And so when you've got a trustless, permissionless system, it's similar to the tangible nature of gold if you're using gold as a bearer instrument. No one can tell me what I can and can't do with my gold when I hold physical gold. Well, now we've created a digital version of this. Not only that, but it's transparent. Anyone can interrogate the transaction history. Anyone can see every transaction that's taken place. Anyone is able to see how much Bitcoin there is and the issuance schedule. And so to me, it's solving a lot of the problems that we've seen throughout kind of this evolution of gold and this movement into the digital age.
The transparency of it all. What I find interesting about like the pattern here is just the evolution of scarcity and humans being drawn towards scarcity, but also being drawn to the path of least resistance.
Yeah.
Right. And like this is like with these part of these conversations, what I'm seeing is like Bitcoin is truly becoming a path of least resistance for currency and for exchange. And
Mm-hmm.
it's just so accepted now by the world that it's created what it is because of the
Mm-hmm.
acceptance, right? Like, yeah, it is just a bunch of numbers and zeros, but the scarcity and the human nature of wanting to own something that's scarce has created this global currency that we can trade around the world with and
Totally.
not having to trust anybody. And it's
Yeah.
like when you talk about a trustless system, my first thought goes, oh, well, I don't trust anybody in this system. So talk about what a trustless system means in Bitcoin.
Totally. So ultimately, I think a trustless system, like to your point, I think sometimes we can get confused and we can think trustless, like, can I trust anyone? But that's ultimately the whole point. How do you have a system which you don't need to trust anyone? You don't need to put your faith or believe that someone has your best interest at heart. And so there's a famous saying in Bitcoin, which is Bitcoin is a system built upon rules instead of rulers. When we're dealing with a lot of these gold backed currencies, these fiat currencies, these paper receipts, ultimately it's a system built on rulers instead of rules. It's the famous saying like rules for thee and not for me. Like
Well,
ultimately we're able to govern the system in any way that supports, well, the system governs itself in a way that supports itself and not necessarily the individuals. And that's why we have things, well, sorry, you go.
well, when we put all the power into the hands of the rulers, they just change the rules anyways.
Totally.
Like that's the issue with trusting a small amount of people to be rulers of your country. Like they just
Yeah.
change the rules however they want to be in their favor,
hundred
without
percent.
a
And
question. So how does
without a
how does
question.
Bitcoin get around that?
Yeah, and I think that this is like we've known about this for hundreds of years. There's many old documents that talk about the manipulation of money, and we even have a term for it, which is called the Cantillon effect.
Who,
And it's
can you say,
those.
sorry, say that again?
It's called the Cantillon effect, Cantillon, the Cantillon effect. And I've completely blanked on it. Is it Richard Cantillon? I've blanked on the guy's name, but I think this was about the 60s, 50s or 60s. He recognized that when we have a system where you have a money issuer, what you start to see is those closest to the monetary spigot, those closest to the money printer, benefit disproportionately. And so when you have a government that controls the monetary printer, when they print money, that money first goes to a lot of the corporations, it goes to a lot of the banking system. Well, they're able to spend that money before it has diluted the currency, so they benefit disproportionately. The people that receive this new money last are the average individuals, the Jane and the John Smith, the people at the bottom. And by that time, money has already flowed throughout society. We've already experienced inflation, and so that money is worth less. And so those closest to the monetary spigot benefit disproportionately. And this is where, when you have something like Bitcoin, when you have a system built on rules instead of rulers, where no single party, no issuer can basically print money at will, what it means is everyone is playing by the same rules. It's everyone is kind of like equal opportunity in a sense that if you work harder, you can be rewarded because capital will flow towards you. And I think that there's a fear, there's a slight tangent here that I really want to kind of quickly touch on. There's a book that I highly recommend anyone reading. It's probably one of the books that most profoundly changed my understanding of money and the world at which we live in. And it's called The Price of Tomorrow by a guy called Jeff Booth. And I highly recommend reading this because we're kind of spun this idea that our world is naturally inflationary. The prices naturally rise. And if you just think back throughout your life, whether you're 20, 30, 40, 50, 80, you just need to look at the cost of living. And yeah, that pretty much tracks. Life has got more expensive. But the reality is that is not our natural state. That is only because of broken money being printed and diluting the currency. In reality, you've actually got to think about what is our natural state. And our natural state is deflation, prices falling. Why? Take Blockbuster versus Netflix. As individuals, we always want to innovate, increase productivity, increase efficiency. Now, with Blockbuster, you used to have to drive down to Blockbuster, expending gas. You used to have to spend 30 minutes in Blockbuster choosing which movie you wanted to watch.
It was
You
so
then,
fun. It
it
was
was
so
so
fun though
fun.
with
I
your
loved it.
date. Like, hey babe, what do you want to
I loved it. I miss it. But you spend 30 minutes in Blockbuster choosing a movie. You rent the movie. You drive home, spending gas time again. You watch the movie. Okay, now you watched it. You got to return it. Drive all the way back to Blockbuster. Drop off the movie. Drive back home. Think
and
about.
we took a week to return it because we forgot. So now we got more fees on
And
top
then
of
you got the fine.
that.
And then you
Late
realize it's
fees.
scratched. And anyway, what you start to recognize is the amount of time and energy in renting a single movie was huge. And when you look at Netflix, for essentially the same cost as one movie, you've got millions of movies at your fingertips. And so what you're recognizing is that technology is constantly trying to drive down prices because we're increasing productivity and efficiency. So that means that if we had a monetary system with a fixed supply, if we're constantly increasing productivity and efficiency, increasing the amount of goods and services in society in relation to the units of currency, over time prices fall. And if prices are falling, what does that mean? Well, it means that life is getting easier. It becomes easier to put food on the table. It becomes easier to put a roof over our heads. It essentially becomes easier to be able to pursue the things that you want to be able to pursue. And the reality is that today we don't have that because we're printing money at a greater rate than technology is driving down prices. And so some people will argue, but if prices were falling, then people are incentivized to hoard money. And if people are incentivized to hoard money, then society will cease to exist. And I would argue that that's absolutely BS because just think about computers. Computers over the last 30, 40 years have got cheaper and cheaper and cheaper for how much power you get. And nobody thinks, oh, next year's computer is going to be more powerful, so I'm just not going to buy a computer. Oh, wait, no, next year computer is going to be more powerful, so I'm just not going to buy a computer. They still buy a computer because in the end, the benefit of that computer in the present moment outweighs the decline in cost. And so I think that the society we live in today, unfortunately, spins that lie because we live in a massively indebted nation. And if you have deflation in an indebted nation, what that means is our purchasing power is increasing. It becomes harder to pay down debt. And that is a massive stressor on society. So in an inflationary system, deflation is scary. But I think that if we were to move towards a society with a scarce form of money, with a fixed supply, ultimately everyone benefits because technology drives down prices. Life starts to get easier. There was a bit of a tangent, but I highly recommend like anyone going and reading The Price of Tomorrow by Jeff Booth because I think that it makes you look at money differently and makes you realize how fiat currency is failing us because it makes life harder because of the declining purchasing power and such.
Oh, yeah, and let's talk about that because it's like we all know what it feels like to be broke. Everywhere I go now, I just hear people saying is how broke they are and how expensive everything is. And I just like, what is it? And I'm very privileged, right? Like I don't have to worry about putting food on my plate on a monthly basis. So I'm very grateful for that. But like you hear these people just like literally they're fighting tooth and nail to put food on their plate every month, trying to keep up with this inflationary environment. Their mom and dad are both having to work, right? And that heightens the nervous system of the child. And like it's just like this never-ending beast of trying to keep up with something that can never be full. Like it feels like it like you talk about that battery. It's just like I'm buying a battery full, but the time I actually get to use it 6 months later, it's not charged anymore.
Mm-hmm.
Like
No,
it's
and
ridiculous.
you're absolutely spot on. And I think this is the challenge is that we are spending our time and energy for money. Going back to the analogy you just used, we're receiving this battery. And we hope that by the time we want to go use that battery in the future to be able to put food on the table, to be able to go and pay rent, that that battery has maintained its charge. But instead, what is happening is we're going to go spend that money, go and use that battery, and it's half depleted. And so what it means is it puts so much pressure on the individual, on the family. And so I find like when it comes to Bitcoin, it's really easy to get caught up in the technicals of Bitcoin, the miners, the developers, the nodes, the users, all these kind of things. But I find what is really interesting is actually talking about the repercussions of money and how sound money fixes a lot of the challenges of society. And again, like the repercussions of fiat money on society have been profound. And so I wrote a book called The Hidden Cost of Money, and it
Hmm.
really dives into a lot of these areas, whether it is our psychology, whether it is our relationships, the parent child bond, whether it's our consumer habits, whether it is business, whether it's politics. When money breaks down, it impacts every single aspect of these areas of society. And this is why, like during this book, there's kind of a common theme, or a sentence that I keep saying or repeating, which is everything is downstream of money. When money breaks down, it alters how we show up as individuals. And maybe
100%.
to give kind of like a couple examples, in the book, I discuss kind of like three main areas which highlight when money breaks down, how does it impact us psychologically? So the first area is something called time preference. So time preference is, you can think of it as a spectrum. On one end of the spectrum, you've got high time preference. On the other end of the spectrum, you've got low time preference. Now, people with high time preference thinking are a lot more impulsive. They're trying to meet their immediate needs. They're doing whatever they can to basically just survive in this present moment. They're not thinking about the future. They're not thinking about how do I save for a family and build prosperity. People with a low time preference are thinking about, man, how can I show up and be the best version of myself? What is it that I value in society? How can I basically build the best possible future for myself? Now, what's interesting is when money starts breaking down, when our purchasing power is diminishing, it pushes us into this high time preference thinking. Because we don't know where we're going to get food from, we don't know how we're going to afford rent, we don't know what the next few years looks like, we become we kind of like lean towards this high time preference, fend for myself thinking. And you start to see this. This is one reason why people aren't having kids. They're like, I don't know how I'm going to afford to have kids. I'm not even thinking about the future. I'm just thinking about trying to survive in this present moment. And so you can start to see when money is breaking down, when purchasing power is diminishing, we shift from this low time preference thinking, thinking about the future, to high time preference impulsive thinking. And you even just see it in the way people spend their money. People don't really invest or save anymore. They speculate, they buy lottery tickets, hoping that that lottery ticket is going to buy them the Lamborghini or the house, because there's no possible way they can do that with their daily income. So that brings us to kind of the second point, which is there's something called our locus of control. And locus of control is, if you ever study psychology, I kind of trained to be a somatic therapist. And a locus of control is a term in psychology, which again, it's another spectrum. You have an external locus of control or an internal locus of control or something in between. And so an external locus of control is that you don't believe you have control over your trajectory, your life, your livelihood, your ability to thrive. An internal locus of control is you believe you have control over your trajectory, your livelihood, who you are, how you show up. And what is interesting, again, there's been thousands of studies done on locus of control, and people with an internal locus of control that believe they have control over their trajectory have greater health outcomes, have longer lifespans, have less depression, mental health issues, you name it. There are countless studies that dive into the positive benefits of feeling like you have autonomy and control over your life. And the problem with broken money is that if I'm trying to save up for a house, and let's say I analyze my income and I realize that based on my current income, it's going to take me 15 years to save for a down payment. So I'm like, okay, you know what? I'm 20 years old. I can afford to do that. And then you get to 25, 5 years in, and house prices have doubled. So instead of it taking 15 years, it's going to take 30 years. What does that do? Does it feel like you have control over your trajectory, over your life? It saps all of that control. And so you end up with people with depression. They feel like they have no autonomy. They don't have governance over their trajectory. And so you end up leading into this depression, anxiety, this apathy for life. And so you can start to see, again, money is changing people's psychology. And the final one that I'll just quickly mention, and again, we're just going to touch on one quick, like psychological term. Most people have heard of like Maslow's hierarchy of needs. So
Hmm.
it's like the 5 tier pyramid, and its base, you've got your survival needs, food and shelter. And then as you start moving up, you get into like relational needs, friendship and stuff like that. And then you get into things like self-esteem needs, confidence. Then you get up into more spiritual needs and enlightenment and things like that. But what you notice is that when money is broken, when money is losing purchasing power and life is becoming incredibly hard to be able to show up, people get stuck on the bottom rung of that pyramid. They get stuck just trying to meet their basic survival needs of food and shelter. They can't think about how can I thrive? What is actually important to me?
You can't.
What
You
is it that
can't.
I value?
Like you can't. You don't have headspace to be able to do it, right? You're
You
thinking about
can't.
survival, and that's the only thing your brain can think about during that time is survival,
Totally.
right?
Totally. And so you start to see that people are getting shoved down and they're getting stuck on this base rung of Maslow's hierarchy of needs, their survival needs. And this is because of broken money. Whereas I think that when you start involving yourself in sound money communities, people that are pro gold, people that are pro Bitcoin, I go along to these events, these Bitcoin conferences, and there are families there, people from all ages, there's kids, there's people from all different backgrounds. And what you notice is everyone is just giving back. Everyone feels like they've got capacity. Everyone feels like they have a deeper sense of self. They're curious about the world. And it's because they have that financial capacity. As Bitcoin is slowly appreciating over time, people have more financial capacity. If they have more financial capacity, they can be more curious. If they can be more curious, they're able to be more generous with their time, with their energy, with their money. And so when I've been moving through these circles, these Bitcoin circles, it has never ceased to amaze me at just the incredible individuals that I've met. Whereas when
That's
I'm even where I am in Squamish, we live where both of us are, we have a very self-interested society. They're focused on sports, they're focused on nature, which is amazing, but everyone seems to be struggling. And so it's really hard to have these deep, curious conversations where people are actually looking outside of themselves. They're thinking about how can they support community, how can they support those around them. So ultimately, what I'm really just trying to get at is that when money is broken, the repercussions start impacting us as individuals and our ability to be able to show up, our ability to support others.
yeah. Well, I think when you say when money is broken, like when did they start breaking money? 1971,
Mm-hmm.
right? Like or around there. And if you look at like what's happened to us as a society since 1971, I think there's even a website. I think it's WTF
WTF 1971.
1971, and like oh my God. Like, talk about when broken money got introduced, like how our society has changed with like mental health and struggles and working parents and connection with family. Like, I think it generally, as a society, even though we're more connected than we ever been, on a personal level, we're feeling more disconnected than we ever have been,
Mm-hmm.
right? So, how does Bitcoin solve all this?
So ultimately, I think when you get back to its root, why did we end up converging with gold? Well, we converged on gold because of its scarcity. And that meant that scarcity preserved purchasing power. If anything, as society thrived, productivity increased, efficiency increased, purchasing power increased. And so life became easier. Societies were able to transact. And what it meant is that when no one can go and print money, when you're confined by this thing that has scarcity, what it means is that if the only way that you can obtain that gold is through trade, what it means that you've got to create value. So what it does is it almost forces a bit of a free market. And so it forces a free market where capital flows to where value is being created. At the moment, that is not the case. We have a central bank, we have governments that govern the monetary supply, the monetary system, and they can print money at will, and they can direct capital, they can stimulate certain areas of the economies. There could be whole sectors of the economy that are thriving, not because they're creating value, but because they've figured out how to get as much subsidies as possible. And so this is the challenge with our current system. So what gold does, it moves us away from this fiat. Sorry, what Bitcoin does is it moves us away from this digital fiat system where we have people that govern the monetary system, and it moves us towards a system where everyone is playing by the same rules. And some of the benefits of that are profound. Like when I think about, and I'm thinking like big picture now, let's just say we started to move towards a Bitcoin standard where people were using Bitcoin globally and it was seen more as a reserve global currency. What would that do? Well, first off, if Bitcoin, given its digital nature, given that people can take custody of Bitcoin themselves, if governments can't go and just print Bitcoin, it means that governments now have to start listening to the people. They have to actually start creating value. And that means that at the moment, we're meant to be supposedly in a representative democracy where the government represents the people, but instead, the governments can really do whatever they want and they're able to print money and fund operations
And
without support from the
rewrite the
populace
rules whenever they
and
want.
rewrite the rules.
Yeah,
Totally.
yeah,
And so
yeah.
I think what Bitcoin enables society to move towards is a society where it holds the government accountable. If the government is not listening to the people and the people do not agree with what the government is doing, then capital is going to cease flowing towards government. Government is not going to be able to fund operations. Government is going to wither away. Another one is going to rise up that listens to the people. So it holds the government accountable. And on top of that, I think that, and this is something that when I started to grok this with Bitcoin, it really, there was something that shifted internally, and it really made me, I don't know, very pro and hopeful for the future. And what I will say is that Bitcoin is the first time in history we've had what's called like a non-jurisdictional asset. What I mean by that is every asset up until now has either been tangible in nature, so you've had heavy metals, you've had all of the minerals in the ground, you've had resources, you've had housing. A lot of these things have been tangible in nature. What that means is it's very hard for you to move those over borders. You can't move your house over borders. You can only move a certain amount of gold without necessarily being seen. It becomes very easy for those in positions of power to seize those tangible assets if they want to go and seize those assets. So, what is the alternative? Digital assets. You go and hold digital assets, you've got equities, you've got bonds, you've got all of these derivatives. Well, all of these various digital assets, the cash in your bank, these assets are held by third parties. If they're held by third parties, they're governed by our government. And that means that if the government wants to seize those assets, they can go and seize those assets. So what it means is we're kind of stuck within our jurisdictions. We're at the thumb of our government. Whereas what's unique about Bitcoin is you can take custody of your Bitcoin by simply memorizing 12 words. And then we don't have to get into the complexity of how that actually works. But it's imagine just being able to memorize a password. Your 12 words are your password to access your Bitcoin. I could walk across a border, start naked, with $1 billion of Bitcoin in my head. No one has any idea I'm walking across that border with that amount of value. And what that means is capital can again flow to where value is being created. If a nation is abusing its citizens, if it's taking advantage of its citizens, if it's spending beyond its means, it is taxing disproportionately, unbelievably high tax rates, people don't agree, people can leave the country with their wealth intact. We've never had this ever in history. Mm-hmm. So it's meant people are at the thumb of the governments. And this is why I think a lot of high net worth individuals are leaning towards Bitcoin, because it enables them to move wealth effortlessly and across borders without friction, without the need for middlemen, without oversight. And so that is something we've just never had. Gold, unfortunately, was not able to achieve that. And so ultimately, it starts to break down nations in the long term, in the long arc of history. When nations are abusing their citizens, it allows people to flee with wealth intact.
That reminds me of a story. I had a client at one point way back in the days. They were a Chilean company, and I think they had the president of Bolivia on their board of directors. This is a true story, man. And like, they emailed me, said, sorry, we have to have a PR that like he's left the board of directors. He got ousted as president. And as he flew into the States, they found 2 coffins full of cash. Like they like arrested him or whatever. Like he was literally trying to leave the country with coffins full of cash. Hilarious. So he could have done that. He could have done that Bitcoin, no problem, though, right?
Effortlessly.
Effortlessly.
Yeah, and you know what? Like that brings up a story where so I help people with Bitcoin custody, and people that have questions, they're unsure. How do I take self custody? I kind of assist them with that. And so I had this guy reach out to me, and this was a few years back. He reaches out to me and he's just like, Seb, I'm like 80 years old. I'm a war conflict journalist. He spent his whole life in war zones. He has no idea what this thing Bitcoin is. He probably about 10 years ago, 12 years ago, he had someone reach out to him and said, hey, look, I really want to support your cause, what you're doing. I think he was in Tibet working with a lot of the Chinese were imprisoning a lot of the Tibetans. And so he was working in Tibet, and there was no way for a Westerner to get money in to support his cause. So he was just like, how can I go and support? And this guy was just like, I have no idea. And he was like, actually, you know what? I've heard of this thing called Bitcoin. Why don't you just send me some Bitcoin? He was like, yeah, okay, for sure. So he goes and sends them some Bitcoin. And Bitcoin was enabled to obviously completely circumvent all borders, all kind of like middlemen, all third parties. And it was able to get money directly to him. Now, he ended up having this little piece of paper with a password on it. Those password accesses Bitcoin. And he came to me, and this is obviously now 12, 13 years down the line. And he's just like, Seb, there's some Bitcoin on this thing. I have no idea how much Bitcoin is on this thing. Are you able to help me just kind of like pull this Bitcoin off this piece of paper? And I was like, yeah, for sure. So he flew into Vancouver. I kind of drove down to Vancouver. He went and bought a laptop, and we opened up this software, and we entered in the password and hit sweep, and this sweeps the wallet, pulls, if there is Bitcoin on it, it pulls the Bitcoin off the wallet and moves it into this new wallet. And because Bitcoin has obviously gone up immeasurably over the last kind of like 12 to 15 years, this 80-year-old the moment we hit sweep, $2.5 million of Bitcoin just appeared in his wallet. And he was just like, oh my God, burst into tears. There's generational wealth. And so what you recognize is that money, the idea of money being a store of value, is it's meant to preserve the ability to use that purchasing power across time and space. We need to be able to transact across space. You and I transact now, me be able to send money to China, me be able to send money anywhere in the world. But I also need to be able to transact across time, which means I preserve my purchasing power or grow my purchasing power in time. And you can see that this guy probably had, I don't know what the original donation was, maybe 500 bucks, $1,000 was donated to him 12, 15 years ago. And now that money was worth $2.5 million. Now, I don't say that as in I think that's what Bitcoin's going to do. It's going to go up thousands and thousands of percent over the next little while. It's becoming a much more mature asset. But I say that because it's really profound that this guy was able to essentially store a series of characters on a piece of paper. And that those series of characters held $2.5 million. And we were able to retrieve that decades later.
Well, let's also talk about where $1,000 cash would have got him. And what would that be worth 12 years later?
Oh man,
Like literally $300.
well, if I was to like kind of relate it to something, 12 years ago, real estate in Whistler, real estate was my thing. And so real estate in Whistler, you could buy a small little two-bedroom apartment, one two-bedroom apartment in Whistler for between $300,000 to $500,000. Today, that same apartment is now worth $1.5 to $2 million. And so when you're looking at that, we've seen a tripling, a quadrupling of house prices in desirable areas over the last like 10 to 15 years. So that means that you would have lost between 66 to 75% of your purchasing power if you'd simply just held dollars instead of going into real estate. Then you look at something like Bitcoin, and it hasn't gone up 4 times. Over the last 10 to 15 years, it's gone up 100 times, 150 times, 200 times. And so you start to realize Bitcoin has basically, sorry, real estate has basically just been decimated in relation to Bitcoin. So when you price your, like, when you price the world in Bitcoin, when you look at the world through the lens of Bitcoin, you realize that prices fall in relation to Bitcoin. Life gets easier. It gets easier to put food on the table. It gets easier to put a roof over your heads. It gets easier to achieve the things you want to be able to achieve. And so the example that I gave earlier, which was the problem with broken money, is that if you're an individual and you're looking at your income and you think it's going to take you 15 years to save for a house, and then a few years in, you realize it's now going to take 30 years. Well, Bitcoin is the opposite. You look at your income and you think it's going to take you 15 years. And then 5 years in, you're like, man, it's actually only going to take me 7 years. What does that do? Man, that instills immense confidence. That brings this locus of control internally where it's like, I have control over my trajectory, my life, where I want to direct my energy. And that builds confidence, increases health outcomes, reduces depression, anxiety, because you start to have hope again for the future. So this is where I think sound money profoundly changes who we are.
So is this easy for you to say because you've been investing in Bitcoin for the last 12 years, right? Like, tell this to someone who bought Bitcoin at, 160 bucks a Bitcoin 6 months ago, and they're down 30% or whatever the numbers are. Like, they're not feeling good about themselves.
Totally. And you know what? That's such a good question. And the thing that I will say is Bitcoin is one of those things where, yes, the earlier you got in, the better position you're going to be in. And the bigger room for error, the bigger room for kind of volatility you have. Bitcoin is a volatile asset. There are many people, if you've got in over the last 4 years, at certain points over that 4 years, you can be down right now. And that can be hard for when you've tried to save in this thing and all of a sudden your purchasing power in the short term has gone down. Now, this is why I think a lot of Bitcoiners will say Bitcoin is not it's not the short-term get-rich-quick scheme. It is a long-term savings vehicle. And this is where what we're trying to push towards, what I believe the Bitcoin community is trying to push towards is if we see market saturation of Bitcoin, let's say we're using Bitcoin as a global reserve asset, we're using it globally as money, and you've got market saturation, at that point, Bitcoin is going to be far more stable because it's going to be a multi-trillion dollar asset. It's not going to be its $2 trillion asset. And so at that point, you're not going to see the same return that people have been seeing historically. However, earlier we talked about Jeff Booth and we talked about how society is naturally deflationary. Now, there are a lot of studies that are done on what is the effect of advancements in technology and efficiency on price. And if you look at technology, the advancements in efficiency and productivity on technology has tended to be between 5 to 15% per year in a drop in price. So if we take the middle ground, 10%, what that means is we're seeing prices fall. If we had a monetary system that had a fixed supply like Bitcoin, even if Bitcoin was basically fully matured and we have saturation, what we'll still see is because of advancements in technology, productivity, efficiency, we should still see prices falling at around 10% per year. Or the flip side of saying that is that Bitcoin would appreciate at 10% per year moving forward because society is thriving and because society is innovating. And that to me is when we start to see the real benefit of Bitcoin. We have a monetary system that enables average individuals to simply save in the currency again. Because the challenge that we face today is that when money is broken, well, people still want to go and store that purchasing power. So what do they go and do? They flee the currency and they go and buy up real estate. They go and buy up farmland. They go and buy up equities. And this pushes up all of these asset prices from all this artificial flows of capital. Artificial in the sense that most people simply want to save in the currency, but they're being pushed into assets because because the currency isn't preserving their purchasing power. And that means that real estate that would have once been used for utility purposes is now simply being used as a store of value. And we see this in Whistler again, where we live, or near where we live. 61% of houses in Whistler are empty, and we have a housing crisis. And it's because people are using houses as money. And then you see farmland. People are buying up farmland left, right, and center because they're simply trying to preserve purchasing power, but they're not using the farmland to grow crops. They're not using it for animals, which provide value to society in the form of food. Instead, they're not using them for the utility purpose, and they're simply using it to preserve purchasing power. So what I believe is that when we actually move towards sound money, if people can simply save in the currency, what that will do is draw a lot of the monetary premium, the capital, out of a lot of these more traditional assets back into the currency. And that means that house prices are going to be a lot cheaper. Farmland is going to be easier to obtain. That means that people that are actually drawn towards farming, people that want to be able to buy a house for their family, are going to be able to do so far easier. That's one of the repercussions of broken money. And so this is where I think Bitcoin enables us to simply save again.
We got about $132,000 Bitcoin right now in Canadian dollars. It's, obviously it's had a little bit of a pullback. Where do you see it could go? Like if this continues to, well, it's already adapted globally. But like what you're saying, this sounds like this thing could really just go crazy still at some point. Like is where if you stop supply of something and you've got the entire world trying to own it, like where does something like this go?
Well, the way that I see it, so we've just talked about this idea that when money is broken, everyone flees the money and they move into assets as a means to be able to preserve purchasing power. Well, let's take a look at the asset market. Now, don't quote me on these numbers because I feel like they're always fluctuating and there's lots of different perspectives. But you've got like the real estate market globally, which is like 250 to 300 trillion dollars of real estate. You've got the bond market, another 150 to 200 trillion dollars. You've got the equities market, another 100 to 150 trillion dollars. The derivatives market is $1 quadrillion sitting on top of all of that. You've got gold, which is $20 trillion, depending on how you measure it. So you're looking at these huge, huge markets, $1 quadrillion or more worth of capital stored in all of these assets. And then you look at Bitcoin, and Bitcoin is $2 trillion. And so I would argue that 70, 80, 90% of all of this capital stored in those assets is simply there for the preservation of purchasing power. And so if you had a monetary system which allowed us to preserve purchasing power, I think that you would, over time, see that capital leave those assets and move back into the money. And so this is where I truly believe that I don't think Bitcoin is going to suddenly go to $1 million tomorrow, $10 million the next day. I think that it's still, you've got to, like, value is a collective narrative and people need to understand what it is. And that takes time. Gold, it took thousands of years to monetize gold. Now, I'm not saying Bitcoin is going to take thousands of years to monetize because we're in the age of information. Information travels a lot faster.
Totally.
But I do think that over the next 40, 50, 60 years, I think Bitcoin is going to be increasingly monetized and a lot of the capital is going to be leaving these traditional assets because I would argue that the majority of the whole financial sector only exists because money doesn't store value and everyone's looking for ways to be able to preserve purchasing power.
That is a very good analogy. And I think that those assets, as they're being shifted, it goes towards gold and Bitcoin.
100%.
Right. There's just going to be a certain percentage of those people that say, hey, I trust gold. And there'll be probably a bigger percentage of people saying, I trust Bitcoin.
Yep.
And so I think there's the storyline kind of holds true to both asset
No,
classes
and
there,
like
right?
as you're saying that, there's a book that I read a few years back that is really insightful. It's called Thinking in Bets by a lady called Annie Duke. And she was a professional poker player, and she talks about how poker and her probabilistic thinking changed her way of thinking about just day-to-day decisions. And I think that we live in a society where we get very polarized, where you're either a Bitcoiner or you're a gold bug. You're either a gold bug or you're interested in silver. And the reality is it doesn't have to be one or the other. You look at this probabilistically, and most Bitcoiners hold a bit of gold. There's a lot of gold bugs that hold Bitcoin. You see people like Larry Lepard, massive gold bug, who ended up transitioning a lot of his portfolio into Bitcoin because he sees the potential of Bitcoin and the asymmetric bet that is Bitcoin. Gold has been obviously saturated for many, many years. So, what is the upside of gold? I'm not sure. I do think a repricing it could go a lot higher. But ultimately, I think that having a balanced portfolio, understanding the risk to reward of these different assets, I think can position you for this world where I think that we're going to see capital leave these traditional assets that have been used as stores of value because money is broken back towards things that actually store value, whether that's gold, whether that's Bitcoin. We're already seeing gold on this run because of the geopolitical tension and what's happening in Venezuela and such, because people recognize I trust gold. Gold has some form of scarcity, even though I don't necessarily know how much supply there is.
Yeah. It begs me the question, like, I wonder where gold would be without Bitcoin. Like, if there was no Bitcoin, God, gold would probably be $20,000 an ounce already.
Yeah.
Like, it just for the sake of just trying to protect their value of the dollars,
Mm-hmm.
right? So,
And to be honest as well, in the end, I also look at it like try to step back from getting attached to a certain outcome and saying that like what I think both gold and Bitcoiners want is it's just like, how do we just have a money, as we mentioned at the start, that preserves purchasing power and enables society to thrive? And if it ends up being gold, that's freaking amazing. If we figure out how to kind of like transport gold into the digital age, then I'm all for it. I don't know how to do that. So that's why I lean towards Bitcoin. But what I care about most is it's not about Bitcoin or gold being the end. It's the means to the end, which enables us to be able to thrive. It's the means to the end. It enables us to be able to show up more authentically and direct our energy to where we see fit.
yeah. Awesome. Seb, thank you so much for your time. Just to tell my audience, we actually did a recording of this a couple days ago and I didn't press record. So, um, awesome to refine some of the questions and get a better understanding of this. I gotta say, it's opened up my eyes to Bitcoin so much being able to talk to you, but also because I was able to look at it from not such a polarized lens of I'm just a gold bug, right? Like, I think our society needs to be more open to both sides of the rhetoric of anything that we go through in life, right? Not just be so closed-minded on one outcome. So yeah, thanks for your time. You've totally opened my eyes to this, and I think there probably really makes a lot of sense for this storyline here. And it just keeps on going back to me about just like the evolution of this and how humans end up gravitating toward the path of least resistance.
Mm-hmm.
And that's just where we are now.
I could not agree more. And you know what? Like I should preface. I should have prefaced this at the start. I when I moved out to Canada in my teenage years, and my first job, I was earning $15.75 an hour. And I was just like, how am I going to be able to afford a family, to be able to buy a house? So I started getting into real estate. And then I was looking at the time horizon of real estate. And then I went into the financial markets. Then I got really curious about macro flows, money. I traded options for about kind of 10 years on value companies. And I believed we were in a free market. I believed that value flowed to where value is being created. So I'd take these positions on these value companies, and instead of them going up, they would go down. And I was like, what is happening? And so ultimately, this made me look at the monetary system. It made me look at how do we get to where we are right now? And that led me down the rabbit hole of gold. And then I was like, I still think there's a lot of flaws in gold. There's a lot of challenges in gold because of its tangible nature, which is why it led me to Bitcoin. And so I think it's to your point, like being able to step back and try not to be attached to the outcome. If something supersedes Bitcoin and it becomes better than Bitcoin, or there is a way to use gold in the digital age, I want to hope that I have the intellectual honesty to be able to look at it and say, this is better. And I think that that's ultimately, if we want to thrive as a society, it's strong opinions loosely held. Like, how do we debate this stuff and try and come together and figure out what is the best solution here and try not to be attached to the outcomes of these systems? But again, like, I really appreciate you having me on, Arlen, and I really enjoy our conversations. I'm excited just to see where this friendship goes and just continue to talk about the world around us and such.
Yeah. Perfect. Seb, thanks so much, buddy. Looking forward to seeing you next week. Or is that this week? Oh, yeah, it's
Next
next
week.
week. Yeah, next week. We're going to hang out next week. So, yeah, we'll look forward to seeing you next week, bud. Appreciate your time.
Totally. Yeah.
Yeah.
And if anyone wants to find me, feel free to, you can find The Hidden Cost of Money, which discusses, this is my book that kind of discusses a lot of these topics and how broken money impacts us as individuals. Or if you want to learn more about Bitcoin, just go to, there's a book called Beers for Bitcoin, which I also wrote. And it just describes Bitcoin and its functionality a little more. This conversation, we kind of stayed out of the weeds. It's really easy to get drawn into the weeds, which actually our first recording got a little more drawn into the weeds. So it's
Yeah.
nice to stay more at the philosophical side. But again,
Yeah.
really appreciate you and the value you bring to the community.
Yeah, we're going to post the links to your books on our page and everything like that too, as well, Seb.
Thanks, Arlen.
Okay. Have a good day, buddy.